Hey, good morning, everybody. It's Thursday morning, April 23rd, 2026, and the IGV is getting absolutely smacked in the face. And it's all because IBM and ServiceNow took the punch in their earnings and are dropping like rocks this morning. If you listen to CNBC, the commentary, it sounds like AI is going to put these companies out of business, that software is dead. Is it dead, or is this an opportunity? In today's video, I want to go through why ServiceNow and IBM are taking it on the chin today, where the lines in the sand are, what needs to hold, and where or if there are opportunities coming out of this. This is not a video to be missed. I think you're really going to enjoy it. So let's just jump right in. Okay, so let's start with IBM. So they're down about 10% so far today, really taking it on the chin. But they beat expectations again, and we'll talk about that in a second. The issue is they kept their full year 2026 revenue and cash flow guidance unchanged, and investors were hoping for a beat and raise scenario. To sidetrack a second, this is exactly why I don't invest in anything the week of their earnings report, because though they might do great, I can't predict how the street is going to interpret those results. And this is a great example. They beat on earnings, they beat on revenue. They did not raise guidance for the rest of the year, and so they got smacked with a 10% haircut. Software growth concerns, and this is what I was talking about in the intro. The revenue grew by 8%. Parts of the segment, especially Red Hat, showed signs of slowing growth, and it's reignited fears that generative AI might be disrupting traditional enterprise software models faster than IBM can pivot. That's what you're hearing on CNBC this morning, that generative AI is going to put software out of business. Consulting services, flagship of IBM, has been soft. That's no surprise based on the market. Any consultant can tell you that. And here's the kicker: a couple of the downgrades are coming in. So JP Morgan lowered its target from 283 to 270. I don't know, $13. Okay, thanks for the tip. And so BMO Capital came in at 270 as well. Here's my take on IBM, and it all comes down to this particular chart. This is their earnings actual and their against their estimates per quarter for the last 3 years. And as you can see, they consistently beat earnings. Fourth quarter is traditionally a big quarter for IBM. So there's seasonality in play because the first quarter is traditionally the smallest quarter, the worst quarter for them. But look at the Q1 2026 result compared to the Q1 2025 result. That's meaningful growth. So I get it. IBM is down. My personal feeling is that it's down too much, but let's look at the chart and see what the chart says. Okay, so this is the daily chart for IBM, and it goes back 2 or 3 years. It's coming back into what has proven to be a long-term support area, going back all the way to about October 2024. You can see it's the point of breakdown from the gap down with earnings in October of 2024. It's the point of gap up from January of 2025. It came back and retested it in April of 2025, and it's recently retested it back in February of 2026. And here we are apparently testing it again. We tested it this morning and are bouncing off it quite nicely. But this is down from 250 plus last night. It's important to note that where the MACD and the RSI are coming in are rolling, appear to be at least rolling over. You have the RSI well below 50, and the you never got a buy signal on the MACD with the current move, and here it is coming back in. This 220 needs to hold. If this 220 doesn't hold, we're coming back to long-term support of going back all the way to the beginning of 2024 over about $200. I suspect we're going to see that. This is not a healthy chart. We had a double top back at the beginning of 2026 come in, and here we are, paying the debt on that. If this whole shelf falls and we do go down to 200, just think of all of this has to be made up to get back to new highs. IBM's got a challenge, and it's going to be a minute before we see new highs back in IBM. So for me personally, it's off the list. So in full disclosure, I've had the opportunity to meet Bill McDermott, who I think is one of the best CEOs out there today. It's really dangerous, and it's proved historically it's very dangerous to bet against Bill McDermott. That being said, ServiceNow is absolutely getting hit today. And the reason for it is margin. First and foremost is margin pressure from acquisitions. So they beat revenue, again, just like IBM. They beat revenue. They beat earnings. They even raised estimates on the year. They just didn't do it enough. And it's getting hit a lot because of their gross margin outlook for the year. So the company attributed this dip in gross margin to costs of recent integrations, um, and investors are scared about the near term, drag that's having on their overall profitability. It's further complicated by what's going on in the Middle East, and they said on the call that 75 basis points were hit to revenue, to subscription revenue, because of delays in what's going on in the Middle East. And I think we're going to hear a lot of that. I think we're going to hear a lot of that from, especially next week when a lot of the Mag 7 is reporting. This thing going on in the Middle East right now is going to have an impact. If nothing else, companies are going to use it as somewhat of an excuse, but it does make sense. Again, we have the AI disruption fears, generative AI, going to put all the software out of business. And now we have the downgrades here as well. Citigroup downgraded from 177 to 154. But that's still damn near double what the stock price is now. But it all comes down to this particular graph. And this is their gross margins over the last, what do you call it, three years or so. And you can see that it's gone from a high of 80 to 75%. Now, make no mistake, those are phenomenal gross margins. But the trend is your friend, and that's not a pretty trend. So, ServiceNow is taking it on the chin today. So let's look at the chart and see what's going on there. Man, what an ugly chart, right? Clear double top back in 2024, and it has been a downtrend almost ever since, from a high around 240 to what's now coming in at 850 or 85. I'm sorry. This support line is a very important support line with ServiceNow, and it goes all the way back. The last time it was touched would have been 2023, January of 2023, November 22, October 22, and it originated back in 2020. So you're looking at February 2020. So you're looking at a 6-year line in the sand. I posted on a short last night that I'm expecting ServiceNow to come back to that level. This move is going to bring it down to that low 70, 71, $72 number. I'll tell you what, that thing better hold. That better hold like Fort Knox, because if that falls, then this is dead money. This is already horrible money for a long time. I will tell you, I am tempted to pick up some long-term shares down at the low 70s on ServiceNow because I believe in Bill McDermott. And I believe that they will get these margins going back in the right direction. But it's certainly got. Let's do this. I'll tell you. Let's do this on a monthly, just to show you it more succinctly. God, look at that chart. It's horrible. Absolutely horrible. It's got 5 years 6 years of shit to get through to see a new high again. Um, and man, look at the volume coming in as this thing on a monthly basis is coming down. We're nowhere near on the monthly on the MACD of seeing a turnaround here. I want to see it come down to the low 70s. I want to see the RSI go to oversold. But I also want to see this momentum start curling, at least flattening, before pulling the trigger on anything related to service now. Just because, man, this is one of the ugliest charts you can see. Okay, so it's worth going through a couple other stocks in the IGV to conclude this discussion today. Because now it's important, I think, to look at where the opportunity is. The two real leaders over the last couple of weeks have been Microsoft and Oracle. So Microsoft is pulling in. In full disclosure, I bought earlier in the week one call option, 4:30 call option for next Friday that I got stopped out of this morning, well, about an hour ago or so, on this breakdown below the 223, 225 number. If it in the next week or two comes back above that, then I'll look to get back in. But it needs to break and stay above it. I do like the fact that we got the break above on the MACD this week. And this is, in the grand scheme of things, at least compared to last week, this is not much of a breakdown. But on a short dated option, it is, right? So I need to see the momentum come back into this. But what I love about Microsoft is it's already tested its long-term support issue of 350. That goes back quite a ways here, all the way back to 2021. That is the line in the sand for me with Microsoft. It needs to absolutely hold 350. A close above this 425 on the weekly could signal better days ahead. But now, after this transpired this morning, we need to see that. The other leader in all of this has been Oracle, and I actually like this chart the best right now in software, though. I can change my mind there. This 135 level is the absolute floor. That needs to hold, but we're still bouncing up against this resistance of 180. We're a little bit below it now, but we are forming a doji, a bit of indecision on the weekly candle right here, just below resistance. I'd love for this to reclaim that tomorrow, and then get a confirmation on that next week for a move up to what I believe is the next support line, or excuse me, next resistance line. I do that all the time, of around 218. So Oracle's, out of all of the IGV, to me, is looking the strongest. There are some, however, that I'm going to start getting interested in puts on if this little route continues in the IGV. Unfortunately, CRM is one of them. And this is, again, the weekly in CRM. If we break down below these candles from 2 weeks ago of 165, we could very quickly see the next line in the sand of the low 130s. We have earnings coming up at the end of May, so we have a bit of time there to see what happens. Because again, I don't trade during earnings week on these things, but we have some distance between now and earnings. So again, I'll be watching this line in the sand of around 165. If it breaks that with substance, I'll look to move down to retest the lows of around 130, high 120s. The other one I wanted to share with you is Adobe. Adobe's chart looks absolutely horrible as well, and we broke below. We weren't able to get above this recent short-term resistance of 255, and here we are trading down to 236 today. The line in the sand has got to be this low 200s. I'll call it 205. That's got to be the line in the sand on Adobe. If it falls below that, man, this stock, talking about IBM, or was it IBM? No, talking about ServiceNow being an ugly chart. Adobe is a really ugly chart. High of 700, and now here we are at the low 230s. with what really looks like no end in sight. Um, not going to fight the trend on this stuff. I think that what today is showing is there might be some near-term uh, benefit to going long with Oracle and Microsoft, but the confirmation that printed earlier in the week is not being substantiated. And so those are the leaders. Microsoft and Oracle have been the leaders over the last couple of weeks. If those fall, then forget it. The IGV is going back down below 80. If that happens, for me personally, I'm going to look at CRM to the short side. The other one I did want to show you is Palantir. Palantir, uh, the line in the sand is the recent lows of 125. But you look, $125 on Palantir is a bounce off of support from February of last year. Other stocks we've been talking about today in software, their support lines go back multiple years, 5, 6 years. So I don't view this particular support line as all of that compelling for Palantir. And if it drops that, if we have a close below that, the next real line of meaningful support, I guess you could say there's one around the $100 mark, but for me, it looks like the low 80s. And I'm telling you, based on what's going on right now in the IGV, it doesn't take much to see us being able to get there. Palantir's got a pretty big moat. Um, they are the favorite son of the U.S. government, it seems, and are making hand over fist. But you know, Alex Karp is like the mad scientist Frankenstein guy from the movies. I mean, people I guess love him. Other people think he's crazy. Uh, I don't know where he falls, but those cult of personalities with CEOs, when everything's great, life is good. But when it's not, it can go bad. It can go real bad. And so I'll be watching Palantir, not from a long perspective, but only from a put perspective if that level falls. So with that, I hope you enjoyed today's video. If you did, let me know in the comments. I really dig when I get comments from people. It's really um, it really makes my day. So thank you in advance for that. Let me know, even if you thought this was bullshit. I'd appreciate the comment. And of course, you know, I'm new to all this. Your subscription to this is free. Just hit the subscribe button and the notification button. It's confirmation to me that I'm not just speaking to myself. And so I really appreciate that too. I hope you all have a great day. Good luck and talk to you tomorrow.